Snap. It has not had a good go of it these last 2 years. I mean, is there a secular story going on with Snap in a situation where, despite an uncertain macroeconomic environment, advertisers are spending money, but they're spending money on places like Google instead?
Yeah, if you looked up disaster in the dictionary, you'd see Snap's ticker. Because ultimately, they continue to lose market share in digital advertising. And again, if you look, there's no confidence in this management team. Execution, in terms of what we've seen from a marketing perspective, and ultimately, you look at these numbers, it just feels like a quicksand feel. And ultimately, those dollars, they're going to others. Because look at what we saw from Google. Look at what I believe we're going to see from Meta. You look at what's happening across the board. Right now, they're just on the wrong side of this trend. This is an Everest-like uphill battle for growth, in my opinion, for Snap.
All right. Adam, want to get your thoughts on this, too, whether it is Snap or, by the way, Visa, which is such a key read on the consumer and talked about a resilient consumer and continues to see some growth there. I would imagine travel again this quarter, as we still go through the results here and await the call. I would imagine travel continues to be one of those areas where we've seen that resilience coming from.
No, I think in the case of Snap, it's just another issue of, online advertising. It's kind of dominated by Meta, Google, and TikTok. And your other more ancillary players just are subscale. Increasingly, the user growth is nice, but you saw a decent user growth with Spotify also. And if it's not translating into profitability or revenue growth, investors just are kind of giving up on the story. So Alphabet and Meta, I agree, probably going to have pretty healthy results based on what Google's posting. And then TikTok also is a huge player that's hovering up market share in this market. And it's those three that are really dominating. And Snap, unfortunately, just it's hard for it to really grow in this environment.
Dan, the two things in Alphabet's report that I was primed to zero in on, and I still am, are the YouTube number, which beat at 7.7 billion versus about 7.4 expected, and Google Cloud hitting 8 billion in revenue versus 7.8 expected. I mean, the overall ads strength is great. I mean, it's certainly a big difference between Snap and Alphabet, but those are the kind of growth areas that you would really, if you're going to be excited about Alphabet, you really want to see outperform, right?
And a big part of the stock getting re-rated is what we see on cloud. I mean, because ultimately, I could argue they're gaining more and more share. That cloud business, some of the parts, they talk the talk, now they're walking the walk, gaining more and more share. And you have the AI, and I know they'll talk about in this conference call that they're going to integrate more and more of that into the cloud. You look at YouTube, it's a flex the muscles moment. You combine this. If you are an Alphabet bull right now, you are relaxing, just watching this, waiting for that conference call, and really being happy. Because ultimately, for tech, a lot of fears coming in here. And you look at Microsoft, you look at Alphabet, I think you'll see smiles from the bulls by the end of these conference calls.